Good evening, and welcome to today's market wrap-up. We have a fascinatingly divergent session to unpack, with capital flowing in very different directions across the globe. Let's start in the United States. The three major indexes ended mixed. The Dow Jones Industrial Average managed a slight gain of 0.17%, closing at 50,872 points. But the Nasdaq and the S&P 500 weren't so lucky, falling 0.97% and 0.26% respectively. What's more concerning is what happened after the closing bell. Futures markets took a sharp dive, with Nasdaq futures dropping nearly 2%. At the same time, the VIX, often called the fear gauge, jumped more than 5% to hit 19.87. This tells us investor sentiment soured quickly after hours, with tech stocks bearing the brunt of the selling pressure. But here's where it gets interesting. The strongest performance today came from China's A-share market. The Chi-Next index, which tracks growth stocks in Shenzhen, surged 3.93%. The Shenzhen Component Index also added more than 3%. Money is clearly rotating out of U.S. tech stocks and cryptocurrencies, and flowing into Chinese growth equities. This is a regional rotation that we haven't seen in a while. Meanwhile, gold fell more than 2% today, and the dollar index is stuck around the 100 level. This tells us capital isn't fleeing into traditional safe havens in a broad way. Instead, it's making deep, selective switches. Investors are selling some high valuation, high volatility assets and buying into policy-driven stories. On the commodity front, WTI crude oil was down about 1% during the regular session. But after hours, prices have already started to bounce back, driven by news of Saudi production cuts and rising tensions in the Middle East. The 10-year Treasury yield edged lower to 4.53%, which also suggests the market is starting to price in some degree of risk. So what was the biggest surprise today? It was the dramatic divergence between Chinese stocks and U.S. tech stocks. Many had expected the escalation in the U.S.-China tech war to hurt Chinese semiconductor companies. But A-share investors completely ignored that negative narrative. Instead, they embraced the idea of domestic substitution and critical mineral retaliation as a positive catalyst. The Chi-Next index surged on heavy volume, staging an independent rally. Meanwhile, U.S. tech stocks continued to weaken after hours, creating a clear seesaw effect. Looking at the broader macro picture, currencies are neutral, equity markets are deeply split, and bonds are leaning slightly defensive. This tells us the market is struggling to find a unified narrative. Chinese stocks are trading on a policy stimulus story under decoupling. U.S. tech stocks are trading on supply shock fears and a risk appetite freeze. For tomorrow's Asian session, Japan and Korea may find themselves caught in the middle. Tech stocks there could face pressure, but energy-related names might benefit. Let me give you a clear directional takeaway. This is not a market where capital is leaving entirely. It is a market where capital is rotating deeply. Our strategy should be to take a controlled long position in A-share energy, defense, and strategic mineral stocks, while hedging against U.S. tech and crypto exposure. If the A-share market does not open sharply lower tomorrow morning and northbound capital flows remain stable, this policy-driven structural rally could have further room to run. But if U.S. futures continue to fall overnight, Chinese stocks could face some catch-up pressure. Stay flexible and avoid chasing the highs.